Hey traders, checking in on the stock market today. So the S&P 500 just keeps going up. This is now the 9th day in a row with a higher low. Are we about to dump? That's what everybody wants to know as we get extended to the upside. We'll look back at the past and talk about some of the previous scenarios, and we'll talk about ways that we can hedge our portfolios, knowing that we are very due for consolidation. So first things first, SPY, higher low every single day for the last 9 days in a row. And if you go back and look at the last time that has happened, it has happened one other time. We had 9 days in a row on the way up since COVID has happened. So looking back again, history is our friend. 9 days in a row into a big drop. So the question that everybody wants to know is this bull move going to result in a big drop, or can we see healthy consolidation into continuation? So we know that RSI and things being overextended means less when we are in blue sky breakout. But again, there are historical examples that we can go back and look at. And just looking at SPY, again, as I said, 10 days in a row, when's the last time that happened? I have no idea. I scrolled back a couple years, and I'm not going to keep counting candlesticks. The point is, it's been a very long time since that has happened. So again, we know consolidation is due. So let's look at some historical RSI levels on our futures chart. The daily RSI is not overextended. We're hitting 70 right now, but look how many times we've gone up fairly well above 70. Plenty of times. So daily RSI has room to go up. The 12-hour RSI is currently at 76. And again, we have historical examples post-dump in 2020, and they were sharp pullbacks. But we were a little bit more of a climax top because both times we hit 80 RSI. And actually one time we hit 80 RSI here, and it was just a bull flag for one more leg up. The point is, the 2 out of 3 times that the 12-hour RSI has hit above 80, it did lead to a sharp pullback. What do we need to see in order to see a sharp pullback? We know we need to see all 3 of our major sectors at the lows at the same time for us to say this is a notable drop. And there will be bear volume behind that drop if all 3 of those sectors are at their lows at the same time. Another time frame, 12-hour, 4-hour time frame, not overextended. So really I'm just watching this 12-hour chart, and if we see a bit more follow through, we'll get to that 80 point. But we have to keep in mind, we can easily see a daily bull flag and continuation. Just let's go back and look at some of the major runs that we've seen here, where we had a big bull move up. Granted, it wasn't a higher low every single day, but just a bull flag into another 3 to 4 weeks of continuation. So my point is, we don't want to be trying to time the top here. The only reason you want to be looking bearish is to protect long-term positions. And if you've been watching these videos, I was swinging hedge positions, short positions, to offset my long exposure often, more than I've ever done before in my trading life. And that was while QQQ was pulling back and then trading sideways. And then once I cut that, I have not entered any hedge position since then because it was the bulls proving it, and they proved it to me. I'm not going to fight the blue sky bulls. I'm going to wait for them to give me a reason to be cautious. Now we have a reason to be cautious. We're overextended. So if you have a portfolio, you want to look at where your holdings are concentrated. Are you higher risk in just a couple sectors? Are you very spread out? Because you want to match what you're hedging against. You know, if I'm big in the tech sector, I don't necessarily want to short the financial sector. That doesn't make a whole lot of sense. So again, the point of a hedge is to protect against pullback. You're not trying to make money on a hedge. You're trying to lock in gains of what you have, and when the market pulls back, your account doesn't pull back with it. If you want to short and look for profit, that's a completely different psychological trade. I should say it's a completely different trade game plan, and the goal of the trade is completely different. So again, distinguish those two as very different things. You're shorting or buying puts or selling calls to hedge a long-term position. So I will be scouting a bearish position here shortly, probably tomorrow. And again, it's not going to be a huge position. I'm not confident in the pullback because there's no reason other than to say we are overextended to the upside, and it can definitely continue for a few more days. Watching this uptrend resistance line, that's still a little bit of a ways away. Let's actually get that a little bit better here. Make sure everybody's included recently, so that's where I would put it. There's probably a better one on the futures chart. I guess that's what we're on. All right. So we'll keep an eye on that resistance. But again, pattern of a higher low every single day. Keep it simple. That's SPY. If SPY holds 406.93 tomorrow, that pattern remains intact. We have pulled back hard multiple times from these big overextended bull moves. Big drop back in September, and we've had a big drop here back on the June move to the upside. So we want to be cautious and protective. Here was another one, just a V-shaped move, all bulls, and then some volatility and a pretty sizable drop. Anything above 383.90 will keep the longer-term bulls in complete control. We've got the weekly RSI getting up to some historical pullback levels. So again, just cautionary signals to be paying attention to. The NASDAQ, all bulls. We set that very quick little daily bull flag, and here we are testing the all-time high. We are less than 1% from that all-time high. Looking at QQQ, keep in mind that the dividend distribution, the price now is lower than it was artificially compared to 338.19, so we're less than 1% away. And again, a bit extended to the upside, but bulls have complete control. What we saw today within the tech sector and what we've been seeing is names running. You know, we'll see Google and Facebook run together, and my hands are doing this because this is where they are positioned on my chart relative to each other, or on my screen with fidelity. But Google and Facebook will run together. Then you have Amazon and Apple running together. Apple's been the biggest laggard of the major tech sector names, and then today was a day where the bulls turned on the jets after breaking very key 127.22 resistance yesterday. Big follow through today, close at the high. And so again, when you're in a euphoria and very confident bullish mindset, you see the money made over here, the profits go over here to make money over here, and that's why you get these laggard situations where it's a game of musical chairs for the bulls, and that's what we're seeing throughout the tech sector now. The momentum shifted a week plus ago, and now we're seeing the big names run to all-time highs, and now Apple being the furthest from its all-time high out of all the major tech names, now it's Apple's turn to run. And that's the reason why I'm watching for the EV space and for other names to run as well, because now they are the laggards. And so the question is, do we see profits flow from the leaders, Amazon, Google, Facebook, and do we see it go to some of these laggards? The answer for Apple is yes, that's what happened, and we're watching to see if that's going to be the case for the EV names as well. Speaking of the EV names, today was the first day recently that we've seen a bullish correlation between Tesla NIO and QQQ. So we're shaping up for the daily higher low attempt, but today's just an inside bar. And NIO, inside bar as well. If the inside bars break bullish tomorrow, the daily higher low is set, and we're then looking back at our recent highs. NIO would need to break 42.06 for the bull break, and the Tesla bull break is much closer percentage-wise, have to get over 7.08 and 7.18. So there was a setup today where the Tesla bulls best case would have set an hourly higher low and closed the day with a new high and a confirmed hourly uptrend, and they couldn't pull that off. So watching for it, had some nice bullish trades off Tesla today, just a couple flips in the morning. I did get stopped out, had a 15-minute higher low entry, double topped at the high of the day. Normally, if I'm day trading, I take that profit every time on that rejection, but was leaving the computer, so I just set my stop under the low for very little risk, and we ended up breaking it. But overall, going to continue watching for the daily higher low to try and be set, because I love this setup where if this daily bull flag is confirmed, the EMAs will cross bullish, and we want to see an uptick in bull volume as well. In the back of my mind, I am definitely saying to myself, the S&P 500 is due for consolidation, and if that happens, it's not ideal timing for this bullish setup, which could mean it no longer remains a bullish setup. So again, just keeping a bit more cautious because of the broader market being so extended. IWM trying for the daily higher low. Have we changed the hourly trend back in favor for the bulls? We did. So higher low and higher high into the close. This is what Tesla and NIO bulls wanted to see for your ideal day. Big time bounce, healthy consolidation midday, and then a strong close with the new high. So with the hourly trend change, we're looking for our daily higher low to be set, and our recent high of 226.69 is the most important resistance in the short term. Financial sector, right up at the all-time highs. We're still right there. Resistance of 34.92 and 35.29. Dip today was bought, closing up at the high of the day, and bulls just need a little bit more follow-through. And that's another factor. What if the tech sector pulls back and the financial sector breaks out to a new all-time high? That keeps the S&P 500 very healthy. XLV will have to break this sideways pattern bearish if the broader market is going to get a notable pullback. So that means 116 needs to break. So if we're going to see SPY get notable consolidation, we need to see XLV break 116. We need to see QQQ break the low of the previous day to see daily consolidation. And we need to see XLF see weakness as well. Because again, if one of those major sectors holds on just fine and keeps going up while everybody else pulls back, there's no red flags for the broader market as a whole. Biotech sector still weak. Daily inside bar, just like the EV names, and it is more correlated to the EV names than it is other places. Used to be correlated to QQQ, but it's now a bearish correlation there, just like the EV names. And we need a daily inside bar bull break for the daily higher low to be set. If it breaks bearish, we're just looking at the low 126.26, and the bears keep their complete short-term control. Semiconductors. Daily bull flag attempt, gap up and close at the high of the day. A break of 257.54 is a new all-time, nope. It'll have us testing the all-time high of 258.59. So two little resistances and a simple statement now, new line in the sand. If 251.16 support is holding, then the bulls have complete control. Definitely one of the stronger sectors, as has been the case for a couple weeks at this point. Solar sector, still weak. Just looking at the low, bulls have to hold 81.07. And again, if the sector is not going up when the broader market is so strong, it's hard for me to imagine a scenario where a pullback in the broader market leads to the bulls holding support and seeing green. So keeping an eye on that key support of 81.07 as we have a 2-day equilibrium continuing to tighten up. MSOS, also still weak. Believe that was a daily inside bar as well. So the daily inside bar has to break bullish for a daily higher low to be set, but if we do not break 44.68, the bulls don't prove anything. So burden of proof, biotech, MJ, EV, solar, still in place. And metals, although metals are still looking good, but they need daily trend changes. That's our group of still need to prove it for the bulls. The VIX dropping to lower lows still. Again, lower high every day. The last 6 days, bears in complete control. And we're not going to see a big spike unless all of our major sectors are weak at the same time. We can definitely bounce, but anything under 2180 is just a lower high. We're down into the 16s now. And the last base was in the 13s. Dollar failed a 4-hour trend change. So it looked like the bounce was starting to shape up yesterday, which led to me trimming some of my metals positions, and the dollar bulls did not follow through. So now it is definitely an equilibrium setup where we will be scouting a lower high next time we bounce. Anything on the 4-hour time frame under 92.50 is just a lower high, and we're still watching for that daily bounce to take place, but no sign of it at the moment, which is keeping the metals strong. Gold over 1756 is a great sign. Double bottom into a resistance break. Again, we will need higher low, higher high follow through if I'm going to start getting excited about looking out the next few months. But did take some profit yesterday, like I said, and that just went from me being in a heavy position where I added into the weakness a week plus ago, and now I'm exiting. I exited the positions that I added, and now I'm back to green in my longer term metals positions because of the bounce follow through. And again, I will just keep that cash, and next time we see daily consolidation, I may be scouting to re-enter. Silver, breaking bullish from the 12-hour falling wedge we were watching. Daily time frame, this is the daily view of it. Daily time frame 26.64, most important resistance from here. And again, daily trend change absolutely will be needed. It's a great bounce off the lows. It's a significant retracement, 50% plus from this most recent leg down, and the bounce off of the lows, nice 7.5%. So again, with no daily trend change, definitely not too upset with taking some profit yesterday. Just a little bit early. No biggie, not going to nail a top every time. Miners, nice follow through. So again, miners are positioned well, even though the metals have yet to change daily trends. The weekly trend has changed. If we zoom out to the 2-month time frame on miners, we're hoping for that higher low to be set, and I'm looking for the gold bulls to set a 2-month higher low as well, right off the EMA 12 support. We do need more follow through on the metals, but starting to potentially shape up. And now miners, our new daily higher low on GDX is 33.85. Let's see who's stronger, gold or silver. Pulling back, so silver's been gaining on gold over the last 6 days or so, but we are just going to be watching for a weekly higher low, considering we haven't changed the weekly trend yet. And again, I personally want gold to continue to stay stronger than silver, just because I believe that is helping find a bottom. We bottomed out first week in March on gold, and we bottomed out on the gold-silver relationship a little bit earlier than that, but we set this little higher low right into the start of March. So essentially, gold has gone up faster than silver on this bounce over the last couple of weeks. Oil, we had that 4-hour still in play, testing resistance. So it could get a break tomorrow. If not, certainly first thing next week we'll get a break. And again, depending on the direction of the break, I then look to the price levels that matter. So if we get over the downtrending resistance, I then look to 61.75 and 62.27 resistances. And if we break through support, I'm then looking at 58.12 and 57.63. Natural gas, did we get another green day to fend off? Inside bar, trying to change the 4-hour trend. Inverse head and shoulders setup. I think we drew that yesterday. And if the inside bars break bullish, it's a weekly bear flag with no follow through. Are we looking for a monthly higher low? We are technically still in a monthly uptrend. Back testing and grinding this EMA monthly support. Let's see if the bulls can pull off a solid bounce after a weekly bear flag with no follow through. All right, so be protective of long portfolios. Absolutely. Now is the time to be looking into a hedge. Now is not the time to be aggressively shorting and not protecting positions. What I mean by that is there is no reason to be aggressively shorting against a blue sky bull when there is no sign of any weakness, because I promise you, people have been doing that for the last 4 days, and they are not happy with their decision to do so. Keep it simple. Higher low every single day. Bulls have absolute 100% complete control as long as that pattern remains intact. So I didn't do a whole lot of trading today, just a couple flips on Tesla, getting those small wins. Went to the nursery today and went all out. It's my flower flex, so I'll make some videos of that. Whole new little garden to plant, some privacy lilacs. Privacy, big lilac bushes. Excited to plant it. All right. I'll see you, what's today? Thursday? We'll see you soon. Do good things. Have a good rest of your day. Oh, baby. Got the whole crew out. Four cubs. Oh, get it. Yes.
Multiple baby bears in multiple trees.